Today's video is brought to you by Rebellious Millionaires.
Hello guys, welcome to another episode of The Forbidden Knowledge. This is episode 5 or 6 of this series, and today it's going to be very exciting. On this channel, we only give the nuggets that the people at the top don't want you to have access to. If you aspire to be a trader, this is the right channel for you to spend as much time as you want, because here is the only place that you can get the knowledge that you want for absolutely free. We don't charge any mentorship fee. We are not here to sell any course or anything to anybody. What if I tell you that investing is actually the greatest business to ever exist on the planet? You come here, you are playing a game with some of the smartest people on the planet and some of the richest people on the planet as well. You can't come here with an empty hand and an empty head. You can't come here when you don't know what to do. You can't come here when you have no idea where you are. So today I'm coming to take you through the 7 rules of investing that every single person should know. The first rule is keep it simple. That is the first rule. Keep it simple. What do I mean by keep it simple or keeping it simple? You know, in the market, there are a lot of information out there that you can get access to on the internet. There are a lot of communities on Telegram, on Reddit, on Twitter, on Facebook, and all these social media platforms that we have all these communities that are, giving some sort of value. Some of these communities are valuable, some of them are absolute trash. And it is your job as an aspiring investor to select or to filter through which one you actually need their information. So when I talk about keeping it simple, you need to first of all have a plan and a strategy. This is a very simple business. Investing is a very simple business, but it is one of the most difficult places to make money. And that is what you need to understand. We all grew up with a assertion that economics is complicated, because that is what we were taught in school, that economics is complicated. There are a lot of terms that these banks on Wall Street and use that they want us to believe that these are too complicated for the average person to understand. But I can tell you for sure that they are not as complicated as they make it seem on TV. They are not as complicated as they make it seem out there. They use all these big jargons just for you to get confused, just for you to lose interest, just for you to, feel inferior, that this is not where you belong, or you need some sort of PhD or master degree in economics or anything before you can play this game. But trust me, there are a lot of people who made billions and millions and billions of dollars in this game without no certificate, without no degree, without nothing. They just came here with the intent, the commitment, the experience, dedication to learn for some amount of money, and they stuck to the plan over the years, and at the end of the day, the market got them paid. What you need to do is you need to find a way to actually make sure that you build something around yourself that is going to allow you, that is going to give you the edge that you need in the market. But if you go around throwing your strategy, throwing your plan into the dustbin or into the bin, just because you've gone on Reddit, just because you've gone on Telegram, just because you've gone on a certain social media platform to see a group of people discussing a certain asset. So you think that, okay, the one that you've planned that you want to buy or you want to invest in, now you don't need it anymore. At the end of the day, you're going to make a very big mistake, that you will regret later. It's the same way that I'm not saying that, you can't find good information on some of these communities and some of these platforms. I, for one, have found a lot of good information on Reddit, good information on, Twitter, finance Twitter, and all these pages, where you come to meet like-minded people that you get to associate with, you get to socialize with, you get to tap into their ideas and all of that. But before you can actually filter this information to get the one that you want, you need to be a person who knows what you really want. There are a lot of diverse assets that we have in the market. For instance, when you go to the stock market, we have the S&P 500, we have the Russell 2000. The S&P 500 consists of the 500 biggest companies in the United States. The Russell 2000 consists of almost 2,000 companies, having their index in, the Russell 2000. So there are a lot of companies out there. That is, when we're talking about the stock market, right? There are a lot of thousands and tens of thousands of companies, publicly traded companies out there that you can actually choose from. How are you going to know that this company is the one that is going to make me money? How are you going to know that this company is the company that is going to make me money? So you can't predict the future. You can't predict what all these companies are going to do in the future, in the next 5 years, in the next 3 years, the next 10 years, on all of that. When it comes to the crypto market as well, we all know that we have about 25,000 different cryptocurrencies in the market. About 25,000 different cryptocurrencies in the market. And I can tell you for a fact that majority of these cryptocurrencies that we have in the market are absolute trash. Majority of these cryptos are cryptos that are eventually going to go to zero. How are you going to be able to decipher the good ones from the bad ones? That is a work that you need to do by yourself as an investor. When you go to other market, we have the real estate market as well. With the real estate market, we have different types of market. We have real estate market in Canada, we have real estate market in UK, in the US, and all of that. So you need, as an investor, to be able to fine-tune your way through all these things. Do enough research as you can to be able to make sure that this market are the market that you want to invest in. So when we talk about diversification over here, it simply means that do not put all your eggs in one basket, as the saying goes. Do not put all your eggs in one basket. Diversification here simply means that you need to be able to apportion or allocate your capital to different types of assets to mitigate risk. Because everything that we do in the market is risky. There is nothing in this market that is not risky. From the crypto market to the stock market to the bonds, to the real estate market to the commodities market, all this market out there, every single one of them carries a certain degree of risk. So the reason why diversification is very important is because you can't predict the future. You can't predict that this company is the one that is going to give a 10 times returns, 100 times returns, or 1,000 times returns. But when you spread your wins, when you allocate your capital in diverse ways, let's say you have a $10,000 account. You have a $10,000 that you are ready to invest. With a $10,000, a perfect diversification for a $10,000 is having a certain percentage of this $10,000 in the stock market. You can have a percentage of it in the crypto market. You can have a percentage of it maybe by buying ETFs or real estate contracts, real estate investment trust, which is basically a real estate contract, by having a portion of it maybe in the bonds market or in the treasury market. So at the end of the day, your $10,000 is going to be working in different diverse market that you have spread your risk across. You understand? So just because you think this market carry this sort of potential, for instance, the crypto market like this is an emerging market. So the volatility in the crypto market is very violent. It's very crazy. So if you are somebody who is a risk averse person, you can't go and drop $10,000 or your $10,000 in the crypto market. That is like you trying to commit suicide, because at the end of the day, your emotions are going to be all over the place, right? So being someone like that, you need to diversify as much as you can by dropping part of that money in the stock market, the crypto market, maybe by buying some real estate investment trust, maybe by buying some ETFs, by buying, any of these assets. So at the end of the day, you're going to have a full basket comprising of different types of assets from different types of market that, there is no guarantee that all of these assets are going to keep going up. At the end of the day, some are going to give you profit, some are going to run your portfolio down. But at the end of the day, you know that since all your eggs are not in one basket, you have some sort of hope, you have some sort of belief that at the end of the day, your portfolio of diverse assets is going to do justice to you in the end. Do your own research. In the market, we call it DYOR, D-Y-O-R. That is, do your own research. Majority of you got into this market during the pandemic. And at that time, there were a lot of stimulus packages going around all over the world. You understand? Because at that time, the US government was giving $1,004 to every single citizen in America. And a lot of these people were looking for places that they can actually allocate these $1,004 that the government was giving them. And that is when, according to Robinhood, about 80% of their sign up over the last five years came during the pandemic. One thing about finance is that you cannot drop your money on anything that you don't understand. Warren Buffett said it perfectly, that if you don't understand, don't put your money inside. If you cannot explain the value of the asset that you want to buy, if you cannot explain the underlying value of whatever asset that you want to buy or whatever business that you want to invest in, there is absolutely no point in dropping your money in that business or in that asset. And that is a law. That is a very sacred law that you need to understand. That is a very sacred law that you need to adhere to. Doing research about companies that you want to buy their stocks comprises of you reading the company's balance sheet, you reading their earnings, the price to earnings ratios, you reading their earnings, you reading their account statements, your balance sheet, and all of that. So it's a whole work on its own. And that is what makes investing very exciting, because at the end of the day, you're going to equip yourself with all this knowledge that no university or no economics class can actually teach you. Let's take the crypto market, for example, as well. There are more than 25,000 different cryptos that we have in the market. All these cryptos, majority of them are utility projects, majority of them are meme coins, majority of them, we call them the blue chips, majority of them, we call them the mid caps and all of that. Majority of these projects have some sort of underlying value that is imprinted in their white paper. In the crypto space, we have something that we call a white paper. Before every project launches, the team behind that project launches their white paper. They launch their roadmap as well. So the white paper is what is going to show you what the project is about. The white paper is what is going to show you the way forward for that project, what the team has in stock for that project. So you need to be able to read all this document. You need to be able to read all these papers to have first-hand knowledge about what you intend to invest in. Know when to let go. In the market, we all know that it is not as glamorous and as easy as they portray online, as some of these gurus and some of these get-rich-quick scheme mentors portray to you online. This is one of the most dangerous places to be. The financial market is one of the most dangerous places to be on earth, because you are playing with bigger whales. You are playing with people with deep pockets. You are playing with very ruthless people. People who want to collect your money at all costs. People who want to see you broke at all costs. People who want to see you sleeping in your mom's basement at all costs. So what are you going to do? You need to also make sure that you have equipped yourself with enough ammo, with enough weapons as you can before you venture into this business. So what do we mean by know when to let go? Knowing when to let go in this business is learning how to cut your losses. In short, it is not every asset or it is not every business that you're going to invest in that is going to return profit. And that's for sure. There are times that you're going to hit some home runs that you will feel like it is all easy down here. But there are times that you're going to hit that rough patch that you will feel like this is not a place that you belong, or you will feel like you are cursed, or you will feel like there's some kind of bad luck chasing you or something like that. So when you hit that stride or when you hit that phase, make sure that you learn to let things go. Let's say you've invested in a certain asset. Maybe you bought an Apple stock, and as time goes on, you started realizing, based on some decisions that the Apple management or the Apple board of directors has been making, you started realizing that the future of these companies keeps changing and changing and changing. So your perspective about the company that made you initially invest in that company has started changing. And the $10 a share that you bought for the stock has dropped to maybe a $5 or $4 or even $3. You are down 70% on that stock. What do you have to do? This is where you learn to let go. Sometimes you need to cut your losses. Sometimes you need to let go. Sometimes you need to call it a day. Sometimes you need to tell yourself that, hey, this is not where I belong. If you hate reading, how can you survive in this business? Because this is a game of knowledge. This is a game of information. This is a game that you can't survive when you don't have the prerequisite information and knowledge that you need to tackle this business. So if you come here telling me that you don't like reading, how then are you going to be able to survive in this business? So without knowledge, you can't succeed in this business. So learn to read books. If you want to become an investor, the first place that you need to start is learn to equip yourself with some sort of knowledge, because the financial market is a very big place. It's a very, very big place. Because take the stock market, for example. We're talking about the US stock market alone has a valuation of about over $33 trillion. The crypto market alone has a market cap or a valuation of about $2.3 trillion as of now. The real estate market is about $200 and something trillion. How then can you come and play in this world when you don't have any idea about what you're doing? You can't do that, because even in the job, in the 9-to-5 job that you're going out there to pick, when you go there, what is the first thing that you need to show? What is the first thing that your employers ask for? The first thing that your employer asks for is your degree. What does your degree represent? Your degree represents some sort of knowledge that you've gone to school for 4 years to go and learn. So why do you think, or how do you think that you can come into this business with no qualification? You can come into this business with no identity and expect that you're going to buy a Lambo, through this business, or you're going to achieve financial independence in this business. It's absolutely impossible. And when you think about these things, it only makes you delusional, because no one ever did it, and you're not going to be the first person to actually do it. So equip yourself with all the knowledge that you can find, or all the knowledge that you can get access to. How do you get access to this knowledge? You need to, first of all, get mentors. If you can't get access to mentors, you need to read books. If you can't read books, you need to. If you can't read this book, if you can't read books, you don't deserve to be in this place. You don't deserve here. You don't belong here at all. And that is one very important truth that I'm coming to tell you. Your gurus out there might not tell you this, but I'm here to tell you that if you hate reading, if you hate going for information, if you hate accumulating knowledge, this is not a place that you belong. What are some of the books that you can arm yourself with as an investor to have any chance, or to have any potential of actually making long-term, building long-term wealth in the market? You can equip yourself with Beating the Street. We have The Intelligent Investor. We have One Up on Wall Street. We have A Random Walk on Wall Street. We have all these, investing books that you can lay your hands on. Get them as soon as possible and start reading them. These are books that were written by some of the smartest investors of our time, some of the richest investors that ever lived. In the age of information, ignorance is always a choice. There is one thing with human beings. When there is money on the line, the two types of emotions that every single human being has always come into play. The emotion of greed and the emotion of fear always come into play. So that is when there is money on the line. So what you need to do as a market player, what you need to do as an investor, is to be able to find a balance between these two emotions. That is what we mean by you controlling your emotions. You can't entirely control your greed. You can't entirely control your fear. You can't entirely eliminate these guys. You can't. It is absolutely impossible, because it was given to us, or it was crafted into the fabric of creation by God. Every single human being on this earth has an iota of greed and fear in them. And thinking that you can eliminate these two guys is you being delusional, being utter delusional. You can't do that. What you need to do is to find a balance between these two guys, so that you don't end up falling on the wrong side of any of them. Because in the market, if you are not defensive enough, you are not going to make money. The same way that if you are not aggressive, if you are not defensive enough, you're not going to keep money. The same way that if you're not aggressive enough, you're not going to make money. The aggression and the defense that we're talking about here coexist together with these emotions of greed and fear. Let's take Bitcoin for example. What happened yesterday in the crypto market? Yesterday, Bitcoin from between 3 p.m. from between 1 p.m. to 3:55 p.m. within that 2.5 hours range, Bitcoin went from 65,000 to 68,000 and all the way back to 64,000. See the range, see the volatility in the space of just 3.5 hours. This is what drives emotions. It sounds simple, right? Buy and hold. When we talk about buy and hold, a lot of people actually think that, you buying an asset today and holding till tomorrow and selling it is what buy and hold actually means. Yes, it's a form of a buy and hold, but when we talk about buy and hold, it's you having enough conviction in an asset that will allow you to buy that asset and hold for a particular amount of time, probably in a long period of time. Because you can't buy an asset today and hold it tomorrow and say you were tired of it because the asset is not going up or the asset is not doing what you expect it to do, but you sell it. There is this saying that is the former CEO of Binance, CZ, said that if you can't hold, you won't be rich. So if you can't buy an asset and hold nicely, sit on your hands for a particular amount of time for the asset or for the market to do whatever it needs to do, you don't expect to get rich from this business. Because the stock market, as Warren Buffett said, is a device for transferring money from the impatient to the patient. The stock market is a device for transferring money from the impatient to patience. So the market is always going to test your level of patience. It is always going to test your level of patience. That is the main reason why sometimes you can hold an asset for months, for years. The asset will remain at the same price that you bought it. As soon as you give up on the asset and you sell it, then the assets start going to the moon. The assets start skyrocketing up. That is what investing is about. And these are the things that sometimes can send you into serious depression in the market. Because imagine you buying an asset that you've held for 2 years, that the price of the asset has stayed in the same zone for 2 years. And you come to a point that you can't take it anymore. And you feel like, okay, you should just close it out and just go on with your life. And immediately that you sell the asset, the market start going ballistic. We advocate for buy and hold and investing because it is the only way that you can actually build long-term wealth in the market. The fact that we advocate for buy and hold doesn't mean that you will buy one asset and hold forever. Yes, you can buy one asset and hold forever, because one thing about assets is that in the long run, they always go up. In the long run, they always go up. You can buy an asset today and you can assure yourself that you have a high probability of making money out of that asset if you can hold that asset for 10 years. Let's take Bitcoin for example. Bitcoin has existed for the past 15 years. And from the first day that Bitcoin got launched, the Bitcoin white paper got launched on the internet, so now it has actually increased over 800,000% from 2009 to now, about 800,000%. So majority of people who bought Bitcoin back then, when Bitcoin was selling for pennies, when Bitcoin was selling for $1, $2, and all of that, and were able to hold till this time, always ended up being millionaires. There was a wallet transcript that got discovered a few days ago on Twitter about one of the OGs of Bitcoin that mined about, I think, 5 to 10 Bitcoins in 2010. And this guy, after mining those Bitcoin, did not move this Bitcoin from 2010, when Bitcoin was a single digit, till now. Back then, Bitcoin, that 5 to 10 Bitcoin was less than even $100. But now, the 5 to 10 Bitcoin is worth millions and millions of dollars. And this guy recently sold, according to on-chain analysis, this guy recently sold about 3 of these Bitcoins, and it was he still has millions worth of Bitcoin, millions of dollars worth of Bitcoin in his wallet. So that is what we call the buy and hold strategy. It is the most viable strategy that you can implement in investing. It is the most viable strategy that you can implement in this business, that in the long run, you are actually going to be able to build wealth. I will always leave you with this phrase, that if you can't buy and hold, you won't be rich. That is one thing that you need to understand. You can write it anywhere that you want. You can write it anywhere that is going to remind you every single day that you want to sell any asset prematurely, that you want to sell any asset, just because price started going down, when the underlying value of that asset hasn't changed and the fundamentals of that asset hasn't changed. Always arm yourself with enough information. Always arm yourself with enough knowledge that you can. That is the only thing that is going to give you the courage and the conviction to actually hold assets for as long as you can, to be able to reap the benefit, or to be able to reap the profit that you want to reap in this market. This is what I have for you, the 7 rules of investing that every single person needs to master before you venture, or before you drop a single dollar into any financial market that you can get your hands on. You can listen to me or not, but the rules doesn't change. Until I meet you next time again, I wish to see you on the other side of wealth and financial freedom. See you next time.